Hello and welcome back to OnChain Reaction, and what an exciting week it has been. I'm your host, James Bennett, and I'm the CEO of ByteTree, where we provide on-chain data and asset management services for digital asset investors. Okay, so let's jump right into it. So Bitcoin remains in a lower volatility regime despite the recent price surge up towards $19,000, pushing $20,000 as of today, the 25th of November. We can see that in previous bull markets, here just looking at 17, Bitcoin's price volatility surged up to around 150% on an annual basis, whereas at the moment we still remain around the 50% mark, which is lower than the likes of Amazon and Apple stocks and certainly Tesla stocks over the last few months. So very exciting to see Bitcoin price surging up to new all-time high levels with volatility still remaining low. Diving into the metrics on-chain, we can see that Bitcoin's transaction value has held well above the $5 billion per day mark. So that means that there are over $5 billion worth of transactions being settled on the Bitcoin network each day. You can see highlighted by the gold circles those periods where it's happened in the past. Again, in the past, prior to a subsequent drop in price, indicating that we were in a late stage of a bull market, a bit of a frenzy as whale money was moving around the ecosystem perhaps. Here, we're starting to see a more sustainable picture building up, and I very much look forward to seeing this progress over the coming weeks and months. So, looking at it from another angle, the on-chain transaction value we look at ByteTree across the whole spectrum. So, we look at the small transactions, we call them micro transactions, all the way up to the whales. And one of the things that we like to do in order to understand the type of users on the network is to break it into quintiles. So that's 5 different bands going from the smallest to the top band, each with an even number of transactions in it. So say we had 2,000 transactions going through a block, then divide that by 5, you get 400. So then we're looking at the value here in the bottom quintile of the first 500 or lowest 400 transactions and what they amount to. What this allows us to see is, okay, the lowest value of traffic, that bottom quintile, is actually growing in terms of its value, which means that we have a slightly more sophisticated sort of user on the network, which is transferring a higher value as a standard payment. As we can see, the last time we were up at these levels was in the bull market of late 2017. You can see in the dark blue lines along the bottom. And again in July 19, similar kind of story. But here on the right hand side of the graph, I mean, we've really seen an organic build in that traffic that isn't sort of reflecting those previous very spiky movements that we saw. Which gives me confidence that this is sort of a well-sustained or underpinned bull market. Okay, as you've seen each week, we like to look at the miners' position. Miners are an integral part of the Bitcoin ecosystem. We need them for Bitcoin to continue running. Miners are doing very well, I'm pleased to report. Their revenues are the highest they've been so far in 2020, despite the halving event that we saw in May. So we're seeing at around $20 million plus of fees, of total revenues. That's fees plus Coinbase, so newly minted coins being generated, and that's just really positive to see. And fees that had spiked at 28% of those revenues have now returned to a more sort of normal level of 10%. Still, that is reflective of a bull market, but it isn't the sort of overpricing that might cause people to start seeking to use another network in place of Bitcoin. Okay, the final chart here, we're looking at the miners' rolling inventory. Quick reminder, that is the difference between what has been mined and what has been sent out for the first time or spent for the first time. Each time a new Bitcoin is generated, it's essentially flagged as a new coin, and we at ByteTree track when that has moved out of that inventory wallet. We can see that miners sold very strongly into the current price surge, peaking out at 123%. So they were taking their opportunity to bag profits while they could. You can see MRI has now dropped down to about 106%, so that means they are actually still burning off inventory, excess inventory. Of course, if they're over 100%, they're sending out more than they've generated, which is only possible if they were sitting on an inventory from before. So overall, all lights are green for the Bitcoin network at the moment. A terribly exciting time to be involved in the market, and we look forward to speaking with you in a couple of weeks. Stay safe.